news is stupid. So the other thing that I would tell beginning investors, don't fucking have news. The prices is all that matter. If you can't condense your market view into a home screen on your smartphone, you're going to underperform the market.
Thank you to everybody here that's live. Thank you, Howard, for being here. This is Traders MindChat Show. We talk to professional traders from around the world, and Howard has done it all. As far as empowering individual investors. There's almost nobody else that comes to mind that's as close to what Howard's done. Between giving us StockTwits, social leverage, investing in Robinhood, early on, with Wall Strip, everything.
eToro.
Yeah. The more that I learn about you, it blows my mind. And I'm just so thrilled to have you here. And I'm going through your content too, and the cutting edge stuff that's on the way. Jesus Christ.
Yeah, I think the big thing that's got me excited, because I mean it's hard to get excited at my age because I could have a heart attack. Is the I don't want to work that hard. I kind of want to enjoy the kids and the life that I built. And so about a month ago, I wrote something we're in a fintech bubble. It was kind of jokingly, the prices were bugging me. I was getting pitched really high valuations, and it's nobody's fault that, Visa bought Plaid for $5 billion and Honey gets bought by PayPal and Schwab buys TD and Morgan buys E-Trade. And so all this cash just right at the top just got sent around fintech companies and founders. And so if you got $1 billion or $500,000 from Plaid and you want to invest in startups, you don't care what the market price, you don't know anything. So you're just writing checks. So there's a lot of liquidity coming in right at the top in fintech. And so about four or 5 weeks ago, end of February, I said, is this a fintech bubble, which is kind of sucks. But in the post I wrote, it doesn't matter if it's a bubble. There'll still be great companies, but it's not as fun knowing that you're on the ledge. Sure enough, I don't know, Visa fell 35-40%, and MasterCard and Square fell 50%, and we've rallied. But what we've seen, and we didn't know this until COVID, is that the only sport that's open is the market. Right? Sports is shut down. ESPN is fucking shut down. Barstool Dave is day trading with $6 million and getting his ass handed to him. It's gladiators of ridiculous dummies learning the market. I didn't think that would be interesting, and it isn't to me. But we just went from a low volatility, crappy, not fun market. And by fun, I mean, for me, fun, it's not fun that people lost money, but fun in terms of I'm a professional, I'll figure it out. But no vol is there's no risk. And so now we've realized that the markets are the ultimate global game, right? That, yeah, it's going to wash out a lot of people, but there was 40 million new entrants over eToro and Robinhood and Wealthfront and Betterment and yada, yada, yada. And the markets did not shut down. In fact, even with a ridiculously inefficient federal government and factional government, the market stayed open for whatever reason.
Did that surprise you?
It's a miracle. It only surprised me because I tapped out at one point saying, okay, listen, I survived, but shut the markets, let these people on the trade desk not get COVID. I was just shocked that they didn't close it. So it just seemed obvious that they would at least give it a 1 day a week holiday for this thing. It's kind of dumb that they didn't. But in hindsight, the only thing that didn't close was the market. And so I think this ushers in a whole new era of, especially with Zoom, every trader could be chatting all the time.
Yeah.
So I've never been more bullish. So it's nice to know that I feel that even though we're in the middle of a bubble in fintech, maybe it goes on for another 10 years. And this was just a crash it's definitely a problem for most of the economy, but in terms of markets, I think this is game time. And now I say baseball is a national pastime of America, but my new thesis is now that possibly the markets are the global national pastime. It's open. You
Yeah.
can't bet on sports for who knows how long.
Yeah, right.
It's not our fault. We didn't do it.
Oh my God. Yeah, like I've seen more people like coming in and starting to ask about markets and things like that too. Like just
Anybody
on
can
every
play.
platform.
Everybody can play. Like it's a little less rigged than sports. If everybody can bet on sports, it feels like players can get bought, and we know people can get bought. And in the market, at least you assume the market's rigged. Like in sports, like at some level, I mean, if somebody can get bought off, like some player can throw a game in a 5-person per team base. I just hate sports. I love college sports, but I hate betting on sports because it just feels like no odds are good. Right. Whereas in the market with an upside bias and, in a democratic, somewhat democratic society, the pie gets bigger. Therefore, the odds of success are higher if you stay directionally. Therefore, more people will play, and you can assume that it's rigged. Let's assume that Trump is telling 5 people the day before he does something, and you can still make money. And what we learned from the pandemic is that we all have, the internet itself is inside information. So it used to be like, okay, inside information. That's all we used to hear about, like the movie Wall Street. It was always about, Buddy, whatever his name was, Bud Fox, inside information, and Gordon Gekko. Guess what? The internet itself is inside information. So those that position themselves well on the internet have constant inside information. By the way, we all fucking knew that China was building a hospital 3 months ago in 4 days. Hello? Like everybody, if they did their job and projected it properly, could see that there was going to be a global meltdown. I'm not saying I caught it. I'm just saying that was pretty much inside information.
Yeah.
So knowing all that, I think the market has a great story to tell and a massive wall of worry to climb over the next decade, because everybody's going to have COVID built into their models, and it's not going to happen again. I mean, we're not through it. I'm just saying it's not going to happen again. So everybody's going to now have to build a COVID-proof business model and be worried for the next 10 years about a COVID summer or whatever. And that's just going to be a wall of worry for assets to climb.
So wall of worry, meaning like not that we're like just get back to the all-time high. But like,
I never think about that. The pie is going to be massive. It's just going to be so different. Yeah. So I don't know what stocks comprise us getting back to all-time highs. I'm just saying we are going to get to all-time highs. And if we go to 1,500 on the way to 3,400, what's the difference? The markets are open and there's opportunity.
Yeah, 100%. Like, so like that with so many people like that are new that are coming to this, like, well, what do you think would be some of the actions that they need to take in order to get started right? Like there's like so many different ways to look at this, and for somebody that's been in the game as long as you have, what do you think is the right way for people to get started with this?
Well, I think they have to start to learn by doing. You get on a bike, it's not like what type of bike, or is it a mountain bike? You got to learn to pedal. So the first thing you do, whether it's $10 or $100, is you open a Robinhood account, or you need to learn to trade on a mobile phone, because that is your edge over a 50-year-old. So everybody that thinks, so there's two things that people just, sorry?
No, go ahead.
Smartphone. So forget the iPad. Get on a smartphone, open a Robinhood account. You can go StockTwits has a trade app account, free trading, fractionless investing, and buy your first. What are you wearing? If you're a 23-year-old and you got $30 and you shop at Lulu or just have Netflix, put your $30 to work, and then build a watch list and start watching red green. Like and it's not 100 stocks. Just use if it's too much information for your smartphone, you're now entering the world of a 50-year-old and giving the advantage to them. You need to start seeing the world that a 50-year-old can't see, which is curating it down to a home screen. That way you've curated it the opposite. You don't want to have information overflow. You want to take the advantage of being a millennial and learn to invest and trade from the smallest amount of data possible. Why go into the old world of 50 screens and compete there? Your advantage is you grew up on a cell phone. So learn to invest off the cell phone, right?
Interesting. Yeah, I was gonna say like, well, what's
Interesting.
the
It's
big
like your
advantage
only
of trading
edge. So why?
trading on?
Everything I do is from my AirPods to an actual physical woman who takes my order. So I repeat myself at one end, and Robinhood on the other end for farting around and buying one share options, like one lots, just to like test strategies. And so I want to see the market as a millennial would see it without 5 desktops going. And then because they're not going to follow 600 stocks like the old days, they're going to be zoned into the 10 that work. And so I only follow, so you know what I mean? Like, why go back to an old world?
Interesting.
Yeah. So learn by doing. Open an account, start saving money, obviously, but also, you know, whether it's Acorns, you know, for my son, and make sure you're putting money off every paycheck. You know, the trick is, they used to say when I was getting a job, my parents would say, pay yourself first, pay yourself first. And I'm like, that doesn't mean anything when there's no digital services, because you would pay your bills and you forgot to pay yourself, and there's no mechanical way to pay yourself first. But if you sign up for Acorns or any of these services, that it just cheats and just takes money every week from your account, puts it into, you know, you don't see it because you don't really miss it if it's taking it automatically from you. And
Right.
so I think those are little hacks that mentally, behaviorally will just work. Software works. So, you know, open an Acorns account, open a Robinhood account, and then, you know, go to StockTwits, find some people that like are interesting and follow the stocks that you like. And then just start, there's no reason to do much. Just start following companies and starting getting a feel for like ranges and see if you're even into it. And if you're not into it, you can still save and invest. Like I call them 8 to 80 companies, you know, companies that 8-year-olds use and 80-year-olds use. They're coming and going all the time. I just added one today. Zoom is now an 8 to 80 brand, right? Like it's, you know, 2-year-olds are on it and 90-year-olds are on it. It's a brand, right? Like it's Kleenex, but digital Kleenex. Like how can you not have that in your portfolio?
Yeah, like, well, we're on it right now.
Yeah, and we weren't on it a month ago, and we'll be on it for 30 years.
It's great. Like, then
It would be annoying if you said, Howard, let's get on the phone and do this, and then we'll broadcast it to YouTube and yada, yada, yada. And I wouldn't even though I like you, I'm not going to return your call. But if you send me a Zoom link and then we can project it to, you know, however many people and yada, 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 I mean, life gets easier. Knowledge gets transferred.
Yeah, like anything that saves time, right?
Yeah. Yeah. Just works. And I'm willing to pay for this product for other features that keep, you know, that make it better. Yeah. It's a miracle.
So then it is like the freemium model, the way, what do you think of that?
Like it's freemium. You are the product. I wrote about today. Like when you are the product, penises will show up and weird things when you can't keep out the riffraff because everybody's crashing. Everybody wants to crash a party. It's like if you're 14 years old and your only skill is coding, you want to wreck things, right? You want to destroy things without physically destroying. So what do? You fucking try and bring down Twitter or Zoom. And if you can't bring down Twitter or Zoom, you're going to make it life miserable for their users. So yeah, Zoom's going to get bad press because hackers are out there, but the premium version of Zoom protects you from that and also gives you extra features. And there's like medical compliance that's built in, and slowly it'll just build this unbelievable paid subscription business. It already has that, but I'm saying, how do you defeat that? Now, Google and Microsoft will come after them as they should, but they're not the leader. They have no brand name. Zoom is a verb that connotates quick conversations with groups or one.
So they're already in the consumer's mind as the Zoom to,
to lose. It's like they could blow it, but they're not. There's nothing to blow. It works. Like, I don't know, someone would have to make it 10 times better and have a pandemic happen and have my mother learn it and have like my nieces learn it. It's already done. It's a miracle. Now, it'll never be cheap, but that's how you invest.
It's a tall order to try to beat it right now.
Why even? Yeah, I mean, and by the way, people will try and beat it. I'm not saying entrepreneurs shouldn't try and beat it, but as a public market investor, you're not going to beat it, so join it. Yeah, you have, as a public market investor, you have to join things. You don't fucking have inside information. You have to join these massive things and just ride them.
So when people are like, for the people that are getting started with this right now, like, well, what are some of the big mistakes that you see them making, or that or you think that they should try to avoid?
Well, I mean, the old mistake, and it pisses people off when I say this, is penny stocks. Like in an era of fractionalization, every stock's a penny stock. So why buy a real penny stock? Like you can buy $20 worth of Amazon. So why are you fucking around with a penny stock biotech? You don't know anything about biotech. You don't know anything about financials. You don't know anything about financial scams and, forums of traders and manipulation. So why even wade in there? You get to bypass all that because you can put $30 a month on Amazon or Lulu, right? Like using fractional ownership. So technology just saved these kids 30 years of learning. So it's like, don't read that much. Like, don't overthink it. Save money and like slowly just start doing it yourself. And if you're down 20% on your favorite company, you'll know if you can stomach that stuff. Like you're going to learn a lot about yourself first.
That's interesting too. Yeah, like I forgot that they started doing the fractional shares.
This is something I've been talking about forever. Like what? This is stuff that Vanguard should have done, right? They're already doing it. When you buy the S&P 500, you're buying fractional shares of 500 good and bad companies. That makes no sense to me. Vanguard should have turned that technology inside out a long time ago, and then they would also be Robinhood. But because they don't think that way, Robinhood exists. Like everybody thinks Robinhood, how they're going to make money, or Tinder, no, they took something, power to the people. They took something that was like owned by the institution, just said, fuck it, we're turning it inside out and we'll see what happens. But at scale, you don't have to worry about how you're going to make money, because at scale, you're going to make money. I mean, it's just the old model. And this is now going to continue to happen in finance over any other vertical, because that's where the money is. People are sick of watching CNBC and not trusting Bill Ackman, or whether he's long or short, or why he's on TV or whatever. Who gives a fuck? Like, he's on TV because he has a position that he wants to fucking say. And the world is sick of that. Like, he has, his PR agent booking him. There's a whole elaborate plan of what he's going to say. He didn't just show up last minute like you and I on Zoom to like cry. That was a whole elaborate fucking plan. And you have to assume that's going to go on always, but it's going to get further distributed. And so guys like them are just getting marginalized.
And so how do we continue that? Like, is it more stuff like this, just like coming out and like saturating, and it's just like they had one voice, one medium, and now like it like democratized, right? Like it's like anybody with a camera and
this can end up with millions of views. We don't know how to do that scientifically. You and I aren't wired. We know how to like click a button and get on a Zoom and like look like idiots, and we're too busy to like.
We know how to get views, right? Like
we're too tired. We make it, and we don't know how to distribute it. But good content will get distributed eventually. So it's like an era of like magic. Like, we don't know what's going to be viral. So you just have to consistently share messages like yoga, and eventually your voice gets heard. Or it doesn't. What's the worst thing that happens? We get smarter by talking to each other. We have another node in the network. And if I get an emergency and I'm stuck in your town, we know each other. You know what I mean? Or what could be wrong? Whereas I watch TV and I'm just aggravated. I was like, everybody's play acting and everybody's got a fucking, ulterior motive. Not that we don't.
Right.
It's that we're just small nodes in the network. And our ulterior motives don't really matter that much because we don't move markets. And TV had this great power, still does, but not every day it gets distributed. And it'll be interesting.
Yeah, like let me ask this too, because like my TV consumption and like how I consume news and all that stuff, like that's just like completely changed over the past 10 years to the point where I don't watch TV really. Like I don't watch Fox or CNN, any of that stuff. Like I'm just like, I'll get my news like, well, whatever comes through Twitter. My Twitter feed tends to be, well, what's important and like for stocks, like, well, what's
What
on.
do you need news for? I don't understand.
Yeah,
Other
like,
than local news, no one needs news. Like there is
yeah,
no
like,
news. We all
like,
would have found out about the pandemic eventually. Everybody eventually screamed. Now, we all knew about it 3 months ago. We didn't do anything about it. So what does news mean other than protect your
exactly.
family? So news is stupid. So the other thing that I would tell beginning investors, don't fucking have news. I hate that Robinhood has news. What is news? Prices are news. If you follow
Yeah.
prices long enough, the news is there. The price is up. Oh, the best company must be doing well. Like, don't complicate it. And if you really love the company, you want the price to be down because you're not watching the news. If you love the company and know the user, like Tesla, if you know the user are going to come to it no matter what the price, the news only distracts you because so the prices is all that matters. Now, I'm not saying news doesn't if you're a big enough investor, you should be investing in yourself and you should be investing in other companies that don't change, that you don't worry about the price the next day. But if you're investing in the stock market, news is completely useless.
Interesting. Yes. Like I feel very similar. And I was talking to a young lady earlier today, and she was asking me about like, well, what kind of news do you watch to like, start making decisions? Do you like keep track of any of that stuff, or like is it just like price volume and like that's like the market
Not
telling
even
you?
volume anymore. The volume is so distributed and dark. Like I don't even know what volume. I mean, there's points when volume matters, right? But there was no signal. The signal was the prices and your own discipline. Like something bad was going on a month ago, or 6 weeks or 8 weeks ago. When, and if you follow enough smart people, that you build a network to just they do the work for you. Why should you watch all the news when you know the two people are good at reading the news? Can do that for you, right? You have to kind of narrow. Again, goes back to the if you can't condense your market view into a home screen on your smartphone, then you're not going to beat the market anymore. Because there's too many people that can hone this thing down to their smartphone. That if you can't hone it down to a Robinhood screen, you're going to underperform the market. In my
So we
opinion.
need to build ourselves a filter.
Yeah, yes. Everybody has to build their own filters and then constantly curate it. You can't not just leave it one screen forever, but you got to constantly, before you let it into your home screen, it has to be really filtered. And then when I check my Robinhood account, I have the picture, because I can't own 1,000 stocks. So I just want to if the future is people checking their phone for their portfolio, then if I'm doing more than that, I'm disadvantaged. Now, once I curated back there, I can use other machines to kind of like expand my worldview. But when I look at the world, I want to see it through the eyes of what the leanest possible thing is, and that would be my smartphone screen. Now, I've slowly introduced other products, like Koifin excites me, and I'm an investor because I just love the markets. And, once you've squeezed everything, once you've disciplined yourself like yoga, for people who do yoga or meditation, once you get it down to the 5 minutes to do yoga twice, to meditation twice a day, which I don't, or once reading puts you to sleep, or whatever your routine is, or once you narrow down your investing world to a smartphone screen, then it becomes interesting to reopen everything. And so now that I see the world through my smartphone, then I started to think, well, Jesus Christ, well, that's fun. But now I'd like to expand that again. So this goes like your aggregators to, you end up in these. So with Koifin, it's like, I love the markets. So if I figured out how to curate, I would love to have a bigger screen that allows me a better way to curate into my smaller screen. So that's what got me excited about Koifin, because now I can digest the world a little wider and cherry pick what I want onto my phone. So I'm now going on a wider curation of my own to make better decisions from my smartphone. So I think you have to get that Zen-like, and so this is the advantage of millennials. They start with this little screen, right? They don't have two desktops or whatever. So they're going to learn this much faster than everybody. But once they get that first screen filled, then they should go to Koifin and then expand that screen out a little more so they can expand their horizons. But everything's about curation.
And for the benefit of anybody that doesn't know what Koifin is, well, what's Koifin?
KOYFIN.com. It's like the best new, like lightweight, powerful, like Bloomberg for everybody. You know, it's just so powerful. People, it's like the internet again, but for finance. So it's started by a Goldman guy, Bulgarian kid, and you just go build you don't have to be affiliated with a brokerage or anything. You can have your, just whatever you want it to be. It's a terminal that you can just slowly build out with all your stock information. It does all the fundamentals, charting, everything. And it's just magic.
Interesting. Oh, very cool.
And it's free.
Even better.
Even better. So you'll love it. I mean, it's just a geek's paradise for people who love markets. But why start there? Start with like Robinhood and learn to see if you're interested in it and keep it really simple, and then slowly expand your horizons. It's like any hobby. Everybody, don't go out and spend millions of dollars on the hobby. Just see if you like it. Sounds like you're agreeing with everything I say. I'm worried.
Yeah, no. Like it's like a interesting perspective to like start with Robinhood.
Trying to teach people what I've learned over 30 years. And it's like, the advantage is you didn't have to do what I did. And everybody thinks that it's like a really complicated business, and it is, but only if you let it become complicated. And you should only let it become complicated once you're an expert in it. So you might as well get to being an expert in it as fast as possible, which is kind of learn by doing. Which is what Robinhood and eToro and StockTwits and all these new companies do, because you can just keep learning.
So, all right. So, like, if you want an argument or a disagreement or something, then like,
I'm kidding. I'm kidding. I mean, I'm supposed to be good pitching at this stuff. I live this life, so I appreciate that you're kind of you get the whole thing. Like, it's not easy for someone who's built their whole desktop world and like it's this complicated, and it is a complicated thing because it's human behavior wrapped around fundamental analysis, wrapped around, discovery, wrapped around trust. But there's tools out there that made it drop dead easy. So you might as well start by doing it. And I would get mentorship, whether it's you or me or whatever, pay for it. Like, listen, you pay for a brain coach, like ask your friends who they respect that will mentor them to learn about the markets. And pay, whether it's $100 a month or $200 a month, pay for it. Like, not everything has to be free. Like, just like you would get like a doctor or a shrink for your head, which I do. The best people have coaches. So you don't have to go through a few of them, but like they're easy to find. Everybody's out there. People have a bad rap. Well, if they were good, they'd be beating the market. No, some people are teachers, and the market has many teachers. And some people are better teachers than they are investors because of psychologically, it's a hard thing putting your money on the line. Doesn't mean they're bad. Just because they're not rich doesn't mean there can't be a good coach, investing coach, right?
Yeah, absolutely.
So that's another thing, is like, get a mentor. You don't need 100 of them, and you don't need to watch every Twitter stream or StockTwits stream or Reddit stream. Ask around, find someone who's good at it, and then just pay for the mentorship.
Yeah,
what a guitar lesson. Why do you need to go,
So you could find somebody too that has an incredible performance, but they're a terrible teacher. And then you won't be able to follow what they're
taking too much risk, and then you don't know just get a teacher. And if that teacher doesn't resonate with you, get a different teacher. And, it'll cost you $3-4 grand over a year, but you will be so far ahead of everybody else, and you'll learn what you don't like more than what you do like.
Yeah, I fell into those traps early on forever, right? Like the first 10 years.
And everybody that we're telling, I'm giving good advice, everybody will not listen and go do this the other way. And they'll go, there was this guy that once was on a Zoom chat that really sounded smart, and I didn't listen to him.
So what was your biggest mistake when you got started then?
There's no biggest, it's just every mistake I made, and I continue to make them. That's what's great about the markets. It's like you're constantly parachuting into hell. But instead of a concussion, I tell people, you just get a cut. Like, you're always mentally, you're getting a scar. But you can't get a concussion trading. Like, you're not going to shorten your life unless you financially ruin it. So it's not but basically, it's every mistake you can make, but at least I don't have a concussion. It's like playing football without a helmet. That's trading. You know?
I've heard this before too. Like, do you enjoy the losses? Like, do you like in the perspective, like, oh, like I'm learning, like.
No, it's terrible. I mean, it's just, but it is, anybody who thinks it's good is crazy. I mean, it's the worst, but it's going to happen. Like, why lie to yourself? You're going to have like horrible months and horrible, quarters. But that's just, I don't know. There's anybody who tells you not, like, it's just lying. So you have to be resilient and you have to have a plan. But like I said, if you find great companies, they're doing all the work for you. Like, you're just riding along, So, no, losses suck, but it's just part of the business.
So how have you figured out how to cope, and how have you built that resiliency?
The resiliency comes from having a network of people that I talk to and a strategy that works for me, which is, I just don't trade unless the market is in a specific type of mood like the last month. Because I have a strong network and I like high volatility, but generally I expect the market to generally be less volatile, and I try and buy great companies and just ride them because they just have a unique angle, whether it's, McDonald's or Lululemon or Netflix or Amazon or Google. They're not inside these companies. And I wait for them to drop 20 or 25%, and that's my edge. And I'm like, well, everybody's nervous. I know that the brand's going to be around in 20 years and the margins are great. So generally I'm like digital brands, or a retail brand that also, obviously, like Apple and Lulu have such a high digital e-commerce part that an 8-year-old uses and an 80-year-old uses. And that's kind of my I try and curate down to those type of companies.
All right.
And the rest is just for game. There's a few on the edge that I love, whether it's Shopify or Twilio, companies that I think no one has heard of yet that are still big, but are going to be much bigger. And they're not 8 to 80 brands. They're just brands that I know are going to become potentially, like Tesla could become an 8 to 80 brand, even though it's like everybody knows it. Once they start making profits, if and when they do, it'll be 20 years in a row of it. So, I'm looking for companies that could be 8 to 80 brands. And then I'm also, the 8 to 80 brands, I'm waiting for those to get hiccup and drop 20 or 30%, and I buy those. Visa, MasterCard. So it's a combination of two strategies.
And are you keeping those two strategies in separate accounts? Like, how are you managing it all?
Good question. I think people should have more than one account just for errors and redundancy. It's mentally how you compartmentalize things, like a long-term account and a short-term account. They could be at different banks. And you got to try and make sure they're not all in the same strategy. And then, generally most people should just have one account, or you definitely should have a redundant account in case something happens. If something goes down for a day or 2 days, you need to have two brokerage accounts. Everybody should. It's like insurance. And most people just need one portfolio. But if you really are into it and feel like you've developed some kind of strategy for yourself that you like adding some returns to it, then you can have a second type of strategy.
All right. And so then if you're adding the second strategy, then does that mean that you have 4 accounts? Like, just to follow along?
I have a lot, just because I tried different things. I have to just, 10,000 here or there just to try products and stuff, and then every year I kind of like rebalance. But I use Morgan Stanley and Robinhood and then one other brokerage. So I have 3. And it's, the Morgan Stanley, I only open once a month. Like, I may do stuff in it, but it's not for me to like change my mind all the time. And then with Charlie, who's my financial advisor, he uses TD Ameritrade. Again, maybe once a month I look at it because it's got it's got an allocation to stocks and bonds. And then my Robinhood account and my StockTwits, I'm opening every minute just to see if I can see something that's interesting to me, and I may add it and put it on my on-ramp to my main account. Right? So it's all just kind of like an assembly line of stuff. And it's like gardening. Like sometimes there's just too many plants and you got to clean it up, and you got to constantly kind of garden and curate.
Pull out the weeds, toss them aside.
And the weeds to me are like business has changed. What was an 8 to, it's hard for an 8 to 80 brand to fall out of favor, but there's so many new digital 8 to 80 brands. I'd rather own a digital 8 to 80 brand than a physical 8 to 80 brand. So like Disney, I love Disney, and I love Nike. But in a world where supply chains are being disrupted and people may not gather at Disney for years and years at the same level, I want to replace those with more digital 8 to 80 brands. So Zoom replaces Disney. And Zoom may be way more volatile than Disney, but it has way more upside to me because it has less headaches to run their business. So overall, I'm moving more digitally all the time because the world's moving more digital.
Is there a reason to not be digital?
No, it's probably like shitty idea to not be digital. Exactly. You're probably just diluting your efforts if all your investments aren't cloud-based. But say Amazon went down one day, I don't know, then that would be a horrible thing. So, I mean, you still got to have some diversification just for your own peace of mind. But that could be T-bills. So you could be you could be 50% all cloud and 50% T-bills, and there's your hedge, or at least some partial hedge. But yeah, I think anything non-digital or 50% non-digital of the company, Nike's probably 50% digital, is crazy to have in your portfolio, because then you're just, then there's leverage involved, and then it could be good. Like then you have Boeings, which are just financial, games. No one knows it could be a great company, but no one understands the balance sheet. So why would you add that to your portfolio? I just don't get it. In a world where we know exactly what Zoom does, we just know. And every day they wake up and they do one thing and they do it better than anybody. And there will be competition, but I want to own companies that do one thing really well and their financial statements are easy to understand. Generally profitable, no reason to cheat because they're profitable. And people love their products because they'll buy the dips. So it's a pretty simple strategy.
I want to take some questions from the audience too. Some people have been waiting patiently. We've got one person that says, Annie Duke factoring in the rigging into your risk parameters.
Yeah. Well, Annie, like me, I just constantly think I'm getting cheated. Not because I am cynical, but why wouldn't I be getting cheated? Of course, people are talking to Trump and then calling their broker. I mean, it's not as simple as like the movies, but of course they are. And if they aren't, shame on them because they're dummies, but people are cheating. So if you don't assume that, you're going to just be mad all the time. Like I see people so mad, like the Fed this and Trump that, and it's all rigged. And I'm like, yeah, but that's still so much opportunity. So just assume, don't be mad all the time, stare at your screen and be mad. There's a way to invest without being mad. So I think factoring in that I'm getting cheated, no different. You open a restaurant, you're getting cheated too. Your waiters are stealing money from you, or overpouring or whatever. Like why be in a restaurant business where there's cheating and there's not much you can do and it's low margins, right? So at least the cheating's just factored in and we're all looking at the same price.
Right, exactly. And you could build a system that takes that into account.
Yeah. So Annie, so that was an interesting interview. She's a smart lady.
Someone else asking, best way to learn options trading?
The best way I think still is like Robinhood, because you can buy one option, meaning, if you love a stock and you want to tie up less money, you can buy one option on, one option. So the best way, there's no one best way. I'm more of like a YouTube. I don't want to read anything because I just can't concentrate. So I want to talk to smart people. So go to StockTwits, follow me and ask me, and I'll introduce you to a bunch of smart options traders. That's the best way, is pay for a mentorship. And if you can do it in a private room, great, just pay it and just help me do this. I want to but you got to learn by doing. So it's like have an account somewhere and do it with as little money as possible, but put real money on the line, like whether it's $50 or $1,000.
And well, also so there's another way to think about money too, right? Like, so like if it's $50, like that doesn't sound like much, but if it's somebody's like only $50, like they're like 18 and they just like, that's all they've got, like would you still start with that, or would it be like, or are you thinking about the person that's like, oh, like I've got 10,000 saved up, like, well, start with $1,000 and then like see how it goes?
Yeah, I mean, everybody's different. So, if you have a rich parent, tell them, I'll go to a cheaper school and give me the savings and put it in a yearly brokerage account. That would be a smart thing to do. But students don't think like that. They're thinking of partying and their friends and stuff. But like the faster you start doing it, the better. Because you're learning a language that very few people know. And then the second thing is, only do it with a fraction of what you can afford. But, $50 gives you, you're going to learn doing it with $50. You can literally go to Robinhood and buy 5 different stocks, $10 a piece using fractional. And now you have a portfolio. And I think anything over 15 stocks is probably over diversified. So you only need 5 to 15 stocks. And if you're young, you probably only need 3 because you already know think about the brands you're going to use for the next 30 years and just buy those.
Question from Craig. Well, what do you think of the SaaS space?
I think it's, an incredible space. But we're seeing even here that SaaS, companies cancel their orders, right? We're seeing with COVID. But it's a cloud-based growth area. So it's a very crowded space, a lot of smart money and a lot of hot money. So you're not going to find any bargains. So you want to wait. You want to buy great enterprise stocks when they're down 20-30%. The Zendesk and the Salesforces of the world, they're never going to be cheap, but sometimes they fall like they just did 30%. And you got to be ready. They're not 8 to 80 brands though, right? Like they're just not. Because they're just not endless growth brands because they're constantly getting disrupted by leaner companies and newer.
So then let's say you find a company that drops 30% and you buy some, right? Like, well, what would be your risk to like stick with it?
Well, stocks like venture capital generally, they're risky, right? So when like stocks I own, first of all, I don't think Nike's going to zero. And hopefully I'd be smart enough to know that I'm not wearing Nikes anymore. And there's a new brand that everybody's talking about, which is why I added Lulu to my portfolio a while ago, which was like the only competition I saw to Nike was Lulu. And maybe Nike would just buy them. They never did, but they still could buy them if they wanted to. So great brands, they may go 50%, even 60% down in a bear market. But if you buy them when they're down 30, you would hope they go down 60 and then you'd buy more. But you're going to be wrong occasionally, and there's like even Warren Buffett has zeros. So you have to be diversified enough that one going to zero is going to happen in your life. Hopefully it doesn't, but like it does happen.
I'm 17 and have been trading my dad's account for a couple of years. Any recommendations on a career?
That could be my son calling. That might be my son asking that question.
Anonymous attendee. Any recommendations on a career trading professionally?
Well, you are professional. Why would you want to trade in an office with other lunatics and gorillas? You are a professional. I consider myself a professional, you know what I mean? So professionally means your own money, not someone else's money. You're working for somebody else. You're going to be working for someone else. So I think it's a terrible profession unless you're doing it with your own money. So make investing your side hustle until you can do it with your own money. If you're going to make it a career, I don't think it's a good career. I think it's a great thing to learn and to always be doing it on your own time and go work for a rocket ship. It could be in the financial world, but young people should be thinking about which companies they want to work for and just go work for them. Don't trade or work as a professional trader. It's a life of misery. Investing for yourself is great. Investing other people's money is just not a great thing. I do it. I'm just saying it's not a perfect world. I don't know why people do it. We're like wired way differently.
We got Joseph saying, I just started an internship at StockTwits with Phil and Riley, and I love it.
Really? Yeah, the average intern lasts about 10 days, tell Joe, so he should be looking for another internship.
Yeah, I was talking to Mike earlier too, Mike Bozzella. Yeah.
Yeah, super talented.
Yeah, fantastic guy.
Yeah.
Love him a lot.
Yeah. No, it's a good crew or a small team. The site's growing really fast. It's got a lot of smart people contributing. And we don't judge people by, you know, their money or what they look like. We judge them by their timeline and their ideas. So people just have to, and I think the number one thing is for people to be nice to their, you know, get some mentorship, be nice. You'll get some mentorship, you know, and kind of, you know, behave. You know, it's a social network. You got to learn to be nice.
Absolutely. Here's a question from Anthony. Do you use stop losses, and how much capital do you deploy per idea?
As a non-professional, because I'm a non-professional, I try and use stop losses. When I'm on StockTwits, I say, this is a trade. Then it's like 8 to 10%. And I hate, but I hold myself by writing about it. You know, the other day was Lake, or, you know, just a trade that Ivan mentioned that I liked. And I just took the loss. Like I won't watch it again, you know, but because I follow people, not lists. And then for like Google, no, I'll be in a sec. So like Google or Apple, I don't have stop losses per se, because I sell a little bit on the way up, knowing that I would be buying it on the way down. So I don't treat it that way. Like I think a lot of like smart people like Ivanov, definitely, because it's their career, should have stop losses and like not let one company blow up their whole portfolio. But I'm dealing with brands that I know are going to be around, and most of my money's in real estate and the companies, not stocks. So stocks is more of a hobby. So I try and treat it like venture capital. I'm like, okay, my portfolio can go down 40%. I do not like that, but I know that the stocks that I own can go down 40%. And I'm just not comfortable getting chopped around 10, 15%.
I know that you've got
average in a good market. I got 25 positions, you know, in a really good market like we were having. So 25, like 2 to 3% a position. I always carry more cash than most people. I can't really look at Warren Buffett. If he has 30% cash, I'm going to have 30% cash. If he has 50% cash, I'll have 50% cash.
Yeah, well, Warren's a great proxy.
Yeah, I don't want to own the stocks he owns, but if he's got cash, I want cash.
I know that you've got to run in a minute or two. Do you have time for one more question, or wrap things up?
Yeah, one more.
All right. Last question from Andy. In your trading investing, how much of your analysis is fundamental versus technical analysis in when you come to buying and selling?
It's becoming more fundamental, and I don't mean fundamental like drilling into their financials, because I don't trust. The game is rigged, so I don't trust any financials, right? Like the only companies I trust are ones that don't need to cheat, which are US-based digital businesses, because their margins are so high. Like, what's the point of cheating? Like, they're winning. You know, when you have leverage and you got like layers of leverage, there's so much incentive to cheat to make the number. But like, we know Zoom's going to make, if Zoom doesn't have to pay anybody to make their number, it's just like the data is the data. So so that's, it's a good question. I mean, but not quite sure how to best answer it.
All right. Well, any final thoughts before you head out?
No, I think, you know, we had the panic. We now, you know, so on the fundamental versus technical stuff, it's like the government's printing money. We're like sending money to people's bank accounts directly. It's like chaos. There are no like people lie to themselves all the time. So I really believe in technicals, but mostly about price. You know, technicals definitely are a snapshot. I love looking at patterns. So, but when it comes down to a company, I don't care about their technicals, because they never look good when you should be buying. When I'm buying my 8 to 80 brands and they're down to 30%, the technicals look like shit. So all the technical people are saying, why would you buy it? So it's like, makes no sense to me. The fundamentals matter at the very high level. You know, is Zoom's a $30 billion company? It's not going to be a $1 trillion company. So I know that I'm not going to make 30 times my money. And I know it could be at $15 billion company, and that would be overvalued then, but enough people would step into the stock at 15 billion. So it's got 50. So I use fundamentals like contextually, like at very high level to understand relative value.
Yeah, very interesting. So you're looking at like the market cap and like how high can it go, and
how big could it be in a world that now is $1 trillion company? Like Zoom's not going to be $1 trillion. Apple's not going to be 10 trillion. Maybe Apple could one day be a $2 trillion company. So you got to trade your position size relative to what the upside versus the downside is.
Does timing come into that? Like how long will it take for them to get to X market cap?
No, I'm not trying to beat an index or whatever. I'm trying to just sleep at night and own the best brands that make sense. So timing does not, I don't care how long it takes.
Oh, but like, so you were saying like, oh, like Apple could be like 2 trillion, but like
you're not thinking 600 billion, I get excited. Like if Apple drops to 600 billion, like it did in 18 or 5, I was excited because I know it can be 2 trillion and I know it's got 400 billion in cash. So like, why wouldn't I put that trade on and sleep at night? Right. So I use market cap as my fundamentals generally. Because that's the amount of, that's just the price.
That's interesting. I'm writing that one down.
Yeah, tell me anytime. But again, it goes to it doesn't work for everybody. Everybody thinks they have their own edge. I'm just trying to simplify things.
Yeah, absolutely. I'm trying to continuously evolve.
Yeah.
Right? Like I'm learning something new.
Evolving is just seeing how big could the pie be. Like I look at Chewy the other day and it's like, I see the stock breaking out, but I can't comprehend how a $100 billion pet market, and they're already a certain billion valuation. Now the pet market could grow 5 or 10% a year, but I just think relative to where it could be, like the valuation of the company, I just don't see, unless a big bang theory happens to the pet industry, how Chewy can triple. I'm not saying it won't. Even though I think it's an interesting company, I just think it's overvalued for what my upside is. So that's just my simple analysis of it, like a growth stock. And by the way, I can use Amazon. I don't really need Chewy. So I just don't see the edge.
Fascinating stuff, Howard. Thank you so much for coming on the show. Really appreciate you being here. Awesome. I can't wait to go back and watch the replay of this and learn some more.
Yeah, aim higher. I shouldn't be but I appreciate the support and your passion for the markets. So I'm glad everybody tuned in, and hit me up on StockTwits anytime.
Absolutely. Thanks again. Much love. Stay safe. Stay well. Peace out.